Hello everyone, again, this is Antonio, and I'm coming at you with another exciting video. First of all, I would like to start off by saying this is not financial advice. The purpose of this video is for entertainment and educational purposes only. Also, for those that don't know me and don't know anything about this channel, on this channel we speak about stock, personal credit, crypto, business credit. We ask you to subscribe to the channel. It does not cost you anything. Also, I have attached my email into the chat box. And if you are interested in doing any type of collaborations with Team Tiggio, please let me know. We will be open to do some collaborations on the channel. We want to grow this channel to greater heights. And we come at you at least 4 to 5 times a week with content. So we make sure that we drop major videos. Check out some of our videos that we did. We did a series on credit repair companies being shut down. Also, we did a video on Centron yesterday. And on today, we are talking about one of the fan favorites on this channel, and that's Canoo. So let's dive over here. Let's see what's going on with Canoo. The market's just open. And right now, Canoo has made a significant recovery because at one point, Canoo was headed towards bankruptcy. And they pulled a rabbit out the hat. Absolutely did they do that. And what they was able to do was they scored a deal with a Fortune 500 company. And when they did that, that catapulted their company because as you can see, they was at $1.75 at that 52-week low. And that 52-week high is $13.35. So even though they scored this deal, Canoo is still considered a penny stock. For those that don't know, anything under $5 a share is considered a penny stock. So you still got time to get into this stock because they off to the races. We're going to monitor this today. Canoo is definitely riding high. And one reason for that is Canoo scored a deal. And I talked about this last week. So this is not the first time. This is the third time that I'm talking about this. I talked about this when I did a video all about EVs. You can check that out. I did that last week. So you can see that I already talked about this deal. But I thought that this was a significant enough deal that Canoo needed its own video, because I did a video, collectively. And let's get down here. Canoo, Walmart deal for 4,500 vans sends electric vehicle stock soaring, and Walmart prohibits Canoo for selling EVs to Amazon. That was a play. Now you got to understand that Canoo had to think either score this deal that's on the table, ready to be signed, or be greedy and try to score a deal with Walmart and Amazon. So for now, it's just Walmart, and that's a significant step that Canoo took because now at one time they were, almost bankrupt. Last week they were under $1 billion of valuation. This week they're over $1 billion. Scoring that one deal with Walmart where they can have a chance to put their vehicles on the street is such a huge deal for Canoo. All right, so retail giant Walmart signed an agreement with an automotive startup company called Canoo to purchase 4,500 all-electric delivery vehicles. Before I get into the article, I said this in my prior video. I'm going to say this again. This was a significant thing because the Canoo was supposed to be made in the EU, which is you got BMW, Mercedes, Audis, all of that is in the EU. But for whatever the deal it was, they didn't feel that it was a significant enough deal. So they said, listen, we taking our company over to Arkansas. Not only did they go to Arkansas, they went to the very city of Bentonville. It was like, look, Walmart, we are here. They didn't go to LA, Nevada, Florida. Rivian came to Georgia. Central went to Florida. Of course, they based out of New Jersey. I'm talking about Central, but they set up for the LS 400 down in Florida. But what they said was, let's make a deal. Walmart, we coming to Bentonville, Arkansas. We need you more than you need us. So that was a significant deal that Canoo did. Not only did they go to Arkansas, they tried to strike a deal with Oklahoma as well. But let's keep going. The deal starts with the lifestyle delivery vehicle, a compact van expected to go into production in the fourth quarter of this year, with the option to purchase up to 10,000 of the vans. Walmart explained in a recent press release the vans will be driven by Walmart employees and used to deliver online orders. They will also contribute to Walmart's goal to achieve zero emissions by 2040. While the vans are expected to hit the road in 2023, Canoo plans to send some pre-production vans to Walmart in the coming weeks to refine and finalize vehicle configuration in the Dallas-Fort Worth area, according to the release. So they already got the plans. It will not be in Arkansas. So the test drive will be in a bigger market because let's be honest, Bentonville, Arkansas is not a big market. You got to test this vehicle in a big market. So they chose the Dallas-Fort Worth area. Both companies declined to disclose the deal cost, but Canoo's lifestyle delivery vehicle retails at $3,477.50. So let's do this. All right. I should have had this already prepared. Let's go to our calculator. All right. Let's go to the calculator. Hello. Let's go. All right. Now, while that's coming in, let's keep going. All right. So we are proud to have been selected by Walmart, one of the most sophisticated buyers in the world, to provide a high-tech, all-electric, American-made lifestyle delivery vehicle to add to their impressive logistics capabilities. Tony Aquila, investor chairman of CEO of Canoo, said in a release. Our lifestyle delivery vehicle has the turning radius of a small passenger van on a parking-friendly compact footprint, yet the payload and cargo space of a commercial delivery vehicle. This is the winning algorithm to compete in the last mile delivery race. And this is one reason why companies like Central really need to strike a deal. Maybe they already have those 156,375,000. Let me do that again to make sure I'm right. 34,750. 34,750 times 4,500. Yeah, 156,375,000. That's how much that deal equates. If my math is correct, which I did it twice. That will call Walmart a massive store footprint, an unmatched opportunity for growing EV demand, especially at today's gas prices. In the release, Walmart provides same-day delivery to 80% of the U.S. population, according to the release. Canoo stock jumped 53% on July 12th. So for the people who got into Canoo at $1 and some change, they up big on the stock. People who have gotten in Canoo when it was at $2.15 per share is up on this stock. Walmart was granted a warrant that gives it the option to buy 61.16 million shares of Canoo, or more than a fifth of the company outstanding shares at an exercise price of $2.15 per share. Per Canoo's official K filing with the U.S. Securities and Exchange. The agreement also prohibits Canoo from selling EVs to Amazon.com. Amazon has previously aligned with the electric truck maker Rivian Automotive in 2019, but signed a deal to buy electric vehicles from rival automaker Stellantis, formerly known as Fiat Chrysler, in January. So they end up signing a deal with Stellantis, but they still have that deal on the table with Rivian. And what Amazon probably wanted to do is to spread the love to different places. But guess what? They were blocked. Rivian said in a January statement that Amazon deal with Stellantis was good news for the industry because it helps further reduce carbon emissions by using more electric vehicles. Amazon's scale is globally unprecedented, and we expect them to purchase vehicles from many providers, the company said. Our own partnership with them is intact, thriving, and growing. Both companies insisted in January that the deal was still on. Rivian is supposed to deliver 10,000 delivery vans to Amazon by the end of this year. Many automakers beyond Rivian, Stellantis, and Canoo have detailed plans to electrify large portions of their fleets over the next decade, with some announcing goals for globally electrified lineups within 5 years. So if you got some dry powder sitting in your account, go ahead and get into this deal. Let's see. This is probably some rebadge information of the same. So we're not just going to sit here and read the same article twice, but I had two articles pulled up, and basically it just breaks down what's going on. You find an entry point. I think the entry point to get in on this stock is when it dropped down to probably at least $3 a share, because every company drops. Find an entry point to get in on this play, because it's going to drop, right? And when it drops, find that entry point where you know your money can at least double or quadruple. I won't get into it when it gets too high, because now you price yourself out. This is still a penny stock. Anything under $5 a share is a penny stock. So make sure that you fine tune yourself, find your entry point, get into the stock, and stop diversifying and recession proof your portfolio. Companies like Walmart and those type companies are going to be around. Kellogg's and these type companies are a way to recession proof your portfolio. All right, so this is Antonio with Team Tiggio. Please like, comment, and subscribe, and we will see you next time.